Hi, this is Sheldon here from the Currency Advisory Desk with today's report. Well, the Indian rupee, as per our previous report, did manage to hit a low of 59.32 levels against the US dollar. However, it could not sustain any further appreciation and is back at the 60 level mark today. India's IIP and CPI data for the month of May and June, respectively, will be released later today. However, we have just got news that the ministry has decided to release these sets of data at 5:30 p.m. henceforth, instead of the routinely followed early afternoon schedule. Now, we cannot help but question the motive behind this move, wondering if the data is so bad that the ministry fears its release during market hours. Now, we advise a buy in the dollar rupee pair at around 59.75 levels in the spot. After the much awaited Fed minutes and Ben Bernanke's speech, the euro moved back to 1.3100 levels. Now, with Mr. Bernanke taking a U-turn on his earlier hawkish comments, markets played accordingly and we saw a rally in risk assets across the board. In fact, both the S&P 500 and the Dow Jones hit a record high of 1,669.23 and a closing record high of 15,409.39 respectively yesterday. We expect the euro to give up some gains and move below the 1.300 levels. The US dollar index has moved up above the 83 levels from a low of 82.60 which it hit yesterday. In rupee terms, traders can go long in the euro rupee pair at 78.20 in the spot. We had some bad numbers for the United Kingdom in the past few days. The manufacturing production came in lower at a negative 0.8% and the trade balance figure was not that impressive and it came in at minus 8.5 billion pounds. Now the pound has given up some of its gains and is trading lower at 1.5135 against the dollar as compared to a high of 1.5222 it hit yesterday. Now we expect some more downward movement in the pound dollar pair. Now, traders can buy the pound rupee pair at 90.85 levels in the spot. Now, even though both the euro and pound are expected to weaken against the US dollar due to the cross relationship of the dollar with the euro rupee and pound rupee pair, they will strengthen in the domestic market. Now, the yen has strengthened considerably against the US dollar. It is trading at 99.11 after it hit a low of 98.28 yesterday. Both the Fed minutes and disappointing US jobless data, which came in at 360,000 versus an expectation of 342,000 yesterday, helped support the yen. Further, the Bank of Japan's stance of not adding further stimulus to the economy, citing that measures taken were having the desired effect, was a shot in the arm for the yen. Now, with these factors gradually wearing off, we will see some profit booking and we expect the yen to inch above the 100 level against the US dollar. In rupee terms, traders can go long in the yen rupee pair at 60.40 in the spot. Well, we end this intense week with the dollar still looking strong against the Indian rupee. This in spite of the RBI dictating terms, firstly by questioning banks on their forex positions and then by prohibiting bank proprietary trading desks from taking any positions in the dollar rupee pair on the futures and options market. This in spite of the additional margins being imposed by SEBI on the dollar rupee contracts in the futures market. And lastly, this in spite of Infosys kicking in the earnings season with a better than expected dollar denominated revenue guidance. That's it from the currency desk. Thank you.